What is going on, guys? Lottery Socks here. Welcome back to the channel. Welcome to the channel if you're new. In today's video, we are going to be talking about the bid and ask, the level 2 order book data, and how to play breakouts or fake outs on stocks. Now, several different videos have been requested in Discord that I cover level 2 order book data, and as many of you know, the market is closed. It's currently a Sunday, but we're going to do our best to cover level 2 market data, as well as how to play specific breakouts. I know a ton of you guys have been losing money with certain plays, certain short squeeze plays. I want to touch on it, and I want to overall upgrade you guys as a trader. So watch until the end of the video so you don't have to watch another update video here on YouTube, because this can help you make a decent amount of money, especially if you plan on staying within the stock market and becoming an actual trader, maybe making a living off of it. So without further ado, please hit the like button so this video gets out to everybody who watches my channel. Hit that subscribe button. Let's get into the video. So we have a clip of level 2 market data right here showing the bid ask and the bid spread on the SPY, the S&P 500. And a lot of you guys may just see this as buyers in green and sellers in red, and then neutral when you see those white numbers pop up. Level 2 market data can help you guys spot where the price is going to go, whether it's going to go up or whether it's going to go down. And this is just another indicator on top of the volume to tell you where and how many shares are being bought at what price. The term bid refers to the highest price a buyer will pay to buy a specified number of shares of a stock at any given time. The term ask refers to the lowest price at which a seller will sell the stock. The bid price will almost always be lower than the ask or offer price. So let's say you guys have 10 identical pairs of shoes that you want to sell for $100. They're all in pristine condition. You're not going to sell them for a dime less because you know that they are in pristine condition. Not only that, but you know there is demand for this shoe. Now you're going to pop up right here in the ask. It's going to say $100 even for 10. Okay, the size is going to be 10. That's going to represent 10 pairs of shoes at $100, and this is what you're willing to sell at. Now on the other side of things, you're going to see the bid, let's say 10 at $99.90. Now this represents the highest number somebody is willing to pay for those shoes. Somebody is willing to pay $99.90, but you're not willing to sell under $100. Therefore, no orders are filled. That will actually be put over into time and sales and when orders are actually filled. So something to note about the bid and the ask, what it's showing is orders that are currently not yet filled, so you have to keep that in mind as well. Now every single time, even in the stock market, no matter where you go, whether you're trying to sell something, there has to be a buyer on the other end representing that other part of the transaction, or whether you're trying to buy something, there has to be a seller on the other end representing that part of the transaction, and you can see it right here, and this can help you determine where the price is going to go, and we're going to talk about why. Now we're just going to pause this and come over to a platform and come take a look at the bid ask. Now of course the market is closed, but if you take a look at the most recent bid versus the most recent ask, you will see that the lowest price somebody is willing to sell their shares at is $439.90, and they are attempting to let go of 5,972 shares. Now the highest price somebody is willing to pay is $439.79. So they are still about 11 cents off from hitting that ask. But if you take a look at that ask and see how many sellers are available there, or at least how much supply is available there, you will know that the SPY may or may not hit a wall when it comes up to that level, currently trading at $439.97. So there's 2 cents to go, and every single time it comes up to that level, it's going to sell off more and more shares, which is essentially going to build resistance at that level. And if you take a look on the bid side of things, you're not going to see that amount of shares even relatively close to that number, so you know there is a major sell wall there. Now one thing off rip, this can prevent you from buying at $439.97 because you know 2 cents up this thing is going to get smacked, or at least for a while. Now if you saw a bid come in $439.98, 1 cent off for 10,000 shares, you may say, oh wow, this is going to knock that sell wall right out of the blue as soon as it starts to bid higher. This can give you an indicator that you can jump into play for whatever market price. Now again, you are going to jump in and your order is going to most likely get executed at the market price because these bid and asks are not yet filled, so you can get in before specific people, and this can also show you where whales are loading up and dropping off shares. For example, you're not going to see a retail order for 75,000 shares of SPY. That is most likely an institution, and if you see that on the bid side of things at $439.80, let's say, you are going to want to buy, especially if the price is lower than that level at all. Now I'd like to go more in depth when the market is actually the open on the bid-ask spread and the level 2 order book data, but I also want to give you a couple of examples of breakouts and how to play them. Now, a breakout is where the market aggressively pushes past a support or resistance level. A fake out is where the market goes through support or resistance, then reverses back shortly afterwards. Now, this isn't just for the ones who trade every single day. This is for the people who have been losing money during short squeezes and who also want to make money in the market but diamond hand some specific positions. Okay, I want to let you know that you can make money here, especially if you're in Discord. We're going to talk more about it, but I want to give an example of a breakout versus a fake out in a stock. So if we take a look at Apple right here, let's say we don't see this happening, right? This is intraday. We're trading Apple. We're on the 1 minute candles right now. You see this descending parallel channel. Don't worry if it's bullish. Don't worry if it's bearish. Usually a descending channel is bullish and you get a breakout to the upside. However, if you bought back here, you may have just lost a bunch of money down here and maybe hit your stop loss, so on and so forth. Of course, if you held through the day, you could have saw a move, but you didn't know that volume was going to come in. That's exactly why we're going to forget about that breakout. Now, taking a look at Apple. If you look very, very closely at the chart, this isn't a picture perfect fake out, but you will see the wick go above this trend line, above this resistance level, not once, not twice, but 3 times, okay? This is what's called a fake out. Now, it's not a picture perfect fake out. I just brought up Apple because it's a stock that I don't have a lot of technicals on. I don't have a lot of TA done to it, so the chart isn't full of a bunch of drawings. So it allowed me just to draw a simple trend line and give you guys kind of a basic format as to what I'm looking at. Now, you wouldn't buy here, you wouldn't buy here. Otherwise, if you bought here, you would have got faked out to the downside and lost a decent amount of money in a very, very short amount of time, which is exactly what stops traders out of their position. Now, if you bought on that fake out, you would have ridden it to that low, down 0.4%, especially if you're trading contracts. That's going to be a decent amount of money, depending on how you are over leveraging yourself. Now, this is very important to pay attention to. Lottery stocks, what do you do then? Like, how do you know this is not going to break out or it's going to break out? Well, first of all, obviously the volume. We talk about volume a lot on this channel, but you see a decrease in volume right here on this green candle shows that there is a heavy amount of resistance. And then the candle right after, volume increased on a downtrend, which shows that sellers are still currently in control. What you want to look for is the candle, not the wick, the candle to close above this resistance level, or the candle and the wick. For example, I would not have purchased on this candle for a breakout. I would have maybe purchased right here on this candle. Now, the reason I would have purchased right here on this candle is because it had a full candle close above this entire resistance level. Now, it did sell off for a second, but it based off of this. Now, of course, I would have had a stop loss set. Now, where would I have set that stop loss? I wouldn't set it directly on this trend line, and the reason for that is because just like a fake out to the upside, this can fake out to the downside, and I don't want to get stopped out before this major move in the chart, before this major rip in the chart, rally in the chart. Okay, so what we're looking at right here, this comes down, this bases, and then you essentially get this breakout. Now, how would you have made out on this? If you bought on this wick right here on that first breakout, you would have made a decent amount of money on Apple, and this is exactly why you want to know where to play the breakout versus a fake out. This would have given you a 1.02% gain, which trading option, you would have made a decent amount of money. Plus, coming into the next trading day, you will see that after this breakout, following this breakout, volume started to steadily increase, which is a beautiful thing to see, showing that Apple may or may not be bullish for the coming day after that. Okay, so this is just an example of a fake out versus a breakout and the quick example of level 2 market data. So what I want you to do is when you come trading tomorrow, take a look at level 2 market data, time and sales on the 1 minute time frame, whatever you're trading, whether it's a SPY, and you take a look at where there is a lot of resistance, where there is a lot of support based off of the ask, which is the sell, the bid, which is the buy, and then you can draw your resistance levels out from there. Take a look at the volume, take a look how many shares are on the bid ask on the level 2 order book data, and wait for confirmation on the breakouts. These are very simple strategies, and 90% of traders fail because they do not stick to the plan, they do not stick to the strategy. But I want to let you know right now that breakout trades are very easy to execute. They are very simple to execute. Other stocks, before you close out the video, how would I know where to cut here? Of course, I don't know the rest of the day is going to rip. Time and sales data are going to give you resistance levels, and you would see right here, this is a major resistance level. Also right here, resistance level. And then you would just bring your stop closer and closer and closer. I recommend running a stop. None of this is financial advice. I'm not a financial advisor. This came up, broke resistance, came back down, base very, very close, and then ripped again. You know that that is a winning trade. Also, guys, if you don't want to pay for level 2 order book data on Webull, you can get it for free. I'm going to leave the link right under the video to Moomoo. All you have to do is download Moomoo, sign up, and make a deposit. Using my link, you're going to get free stocks, including up to a free Tesla or Google stock and free level 2 order book data, so you can see where whales are loading up and dropping off shares. Also, guys, talk more with me in the Discord so we can play breakout trades together. That link is right under the video as well. We have options trading alerts in there. We post gains, post losses, talk stocks, and more. Obviously, I'm going to go over this more in depth in another video. It's a Sunday. I don't have the time and sales live, but that would be much, much easier to make a video on when I do have that. I have a lot more videos that are requested that I'm going to get to hopefully on the weekends, because the weekdays are just super busy keeping up with stuff that is happening current in the market. So just keep that in mind. Overall, guys, that is it. I love you all. Lottery Stocks out.